Well, as we mentioned, shares of Johnson & Johnson are trending higher this morning. The stock has been a bit up and down after releasing results that included a guidance update and an accounting for acquisition it made in the medical device segment. Joining us for a closer look is Vamil Divan. He's an analyst with Guggenheim Partners. Vamil, thank you very much for joining us. There's been lots of news here. The company, Johnson & Johnson, in my understanding, beat on revenue, beat on earnings. Sales of a key cancer drug were key. Tell us more about the results as you saw them.
Yeah, thanks for having me on. And it did look like overall a solid quarter. The pharma business, what they call innovative medicines, actually seemed to do pretty well. You mentioned the oncology business, immunology also generally positive results. The medical device businesses were a little bit more choppy. They had some issues, especially outside the U.S. and in China. But overall, good quarter. And they did raise their operational guidance for the full year. They are, as you mentioned, they're taking some impact of some of the deals they've done recently on the bottom line. So they lowered their reported EPS guidance. But overall, it looks like a solid quarter. And then even beyond the quarter, I think a lot of focus on the progress they're making on the Talc side. And some of the comments there were also, I think, encouraging and maybe helping the stock perform well today.
Bring us up to date on where the Talc situation stands. I think most viewers will recognize that you're referring to lawsuits stemming from the many years that Johnson & Johnson sold talcum powder.
Yeah, that's right. So there's some, tens of thousands, maybe about 100,000 different cases that have been ongoing that they've been trying to address. The latest is that they've done this maneuver to sort of isolate that within a subsidiary that's then declared bankruptcy. There's been some questions whether that's legal and appropriate to do through the bankruptcy side of things. So there was an important ruling last week where this situation has now moved to the courts in Texas, where there might be a little bit more favorable outlook for them to get this resolved and get it resolved through the bankruptcy and resolve all the current claims, as well as some of any potential future claims. So there's still a little bit to go here, so we'll see how it all plays out. But the comments from last week and also on the call this morning is suggested by the end of the year or early next year, we may have some resolution. And we're looking at some sort of, billions of dollars of fines that they're paying, but they've already sort of allocated for those. I think investors generally have factored those in as they think about the long-term outlook for the company. So I think now it's just a matter of getting it resolved, and then people can look at the progress they're making with their actual underlying products.
One thing investors always want to understand with these large cap, mega cap pharmaceutical companies is the state of the pipeline. And I gather that the company is now facing generic competition for its psoriasis treatment, Stelara.
Yeah, so that's the biggest, or has been the biggest product, is now facing competition outside the U.S. this year. By the early part of next year, there will be a generic or biosimilar competition. That will impact sales of that product. They have done a nice job replacing that with Tremfya and some other immunology products. More importantly, we do think their pipeline is pretty interesting right now. They have some interesting assets on the oncology side. They have some other ones in immunology and in neuroscience. We're sort of waiting to see how the data reads out for some of those. There's some important data reads later this year, into next year. And then our view is we have a neutral rating on Johnson & Johnson right now while we wait for the Talc situation to resolve and some of the headwinds from losing some of these key products, the generic or biosimilar competition. But as we get past that and in the next year, more of the pipeline data comes out, then it looks like this might be a more attractive story to start really investing in more meaningfully.
You mentioned medical devices a short time ago, and the company did recently agree to pay $1.7 billion US for W-Wave Limited. It's developing a device implant for heart failure. How promising is that product? And tell us more about the medical devices business of J&J.
Yeah, so we think that's an interesting asset. It's early, so it's still, we'll see how it sort of evolves on the market. They've done a number of deals, and several of them in the cardiovascular space. So there were two bigger ones, a company called Abiomed and another one called Shockwave. And it sort of ties into their overall approach to divest and move away from some of the older, slower growing areas and move into these higher growth, higher margin businesses. So I think what they're doing makes a lot of sense to turn that, that business, which had been a little bit of a drag on the company's overall performance a few years ago. Now it's performing pretty well, but maybe some real chance to be more of a driver of top line and bottom line growth as we look out over the next few years. So we think what they're doing makes sense. There isn't that sort of the patent issue that you have in the pharma business. A little bit more stability to the growth there that you'll get, whereas pharma is a little bit more cyclical as Stelara, Xarelto, and some of the other key products do face generic. So we think what they're doing makes a lot of sense. Let's see how the integration goes and can they really drive the products what they think they can be. But I think they're positive moves overall.
You have a neutral rating on the shares and a price target of $156 per share. Why are you neutral on the stock right now?
Yes, I think it is sort of in this period of transition. One is these key products going away. What's that going to do to the top line and their bottom line? These are very, very high margin products that they're losing market exclusivity on. Stelara one, but also another one coming up here in the next couple of years. And then there's the Talc situation, which I think has been a very big cloud over the company, and unclear how that was going to get resolved. So again, I think they made good progress on both fronts this year, and next year looks like it might be a more attractive time to get in the name. If some of these headwinds have eased or are out of the way, and then you get the pipeline and some of those med tech acquisitions to start driving maybe a new sort of era of growth for them going forward.